Good afternoon, everybody. Blockchain. Let's start with a more important word. And that word's provenance. What is it? It means the history of something. Where did it come from? Where did it go? Who owns it? Who bought it? Who sold it? And where is it now? It is the life story of an item. And in the world of luxury goods, provenance matters. Because you cannot separate the value of an item from its origin and its history. It relates to diamonds, to watches, to art and to jewellery. But there is a fundamental problem. The world's provenance is locked in paper. In a very simple story, I get a receipt from the store, I bought it, I put it in the drawer, time takes a hold, and I forget where I put it. Now, in all this paper, when provenance is lost, another word emerges, and that word is risk. Risk is the foundation of our biggest black markets, and the first is theft. In the heart of Hatton Garden, London's diamond district, last year, £200 million of jewellery, diamonds, watches and cash were stolen. And then there's the second market, fraud. What's stopping me from calling my insurance company saying something's been lost or stolen, only it hasn't been? I keep it and I pass it on to the next person in 6 months' time. And then there's the third issue, cyber. A problem that's creeping not only into our banks and insurance industries, but it's washing the shores of our own personal security of data on a daily basis. So these problems are real, they're quantifiable, they're $50 billion to insurers annually. So we created Everledger. It's a digital global ledger that tracks and protects items of value. And of course, we're on the blockchain. It's immutable, records are permanent, cryptographically signed. It addresses the major issue in the diamond industry around document tampering and fraud. The information is fast as it propagates around the globe on distributed nodes. And of course, it's scalable under the work that we've done recently with Ascribe. We started with diamonds. Let me show you what we did. First, we created relationships with the major certificate houses around the globe. America, India, Israel, Antwerp, where they grade and certify each of the diamonds. Not only do we capture the 4 Cs of the diamonds, which we capture the serial number on the girdle of the stone, and 40 metadata points of the diamond. We digitise that like a thumbprint of the diamond. We write that and the inclusions, the faults within the stone, into the blockchain. We now know where diamonds are being sold and resold in marketplaces such as Amazon and eBay, work with Interpol and Europol on diamonds that are crossing borders and entering into black markets, with insurance companies on fraudulent claims, and with banks to assist them in the double financing of the diamond pipeline. We started in London 1 year ago. We had our birthday on Sunday, and we were part of the Barclays Accelerator. And over the last year, we've built relationships with some of the biggest insurance companies in the world. Allianz globally, in the heart of France, where most of the luxury goods are manufactured today. Barclays in Africa, where the volume of the world's diamonds are still mined. Commonwealth Bank and BBVA, where compliance matters in emerging markets such as Latin America and Australia. We have 980,000 diamonds on the blockchain, and we're adding thousands on a daily basis, and we're scaled this year out to a pipeline of 10 million diamonds. We built smart contracts so we can track the ownership and custody of those stones as they pass through the middle part of the pipeline. 2016 and beyond, what we're working on right now. We form relationships with one of the oldest brands and names in the diamond industry, a 135-year-old company, focused on the ethical supply chain. We know that this technology is going to wash the shores of supply chain finance, but more importantly, the consortium of 80 countries came together to form the Kimberley process. They formed that to reduce blood diamonds in industry. They did a relatively good job. There's still 1% of the diamonds that circulate around the globe are from unethical sources. We believe that the most important part of the use of this technology is to bring robustness in the financial transactions around not only supply chain finance, but the ethical certification process that follows the diamond from its source of mine right the way through to the market. Over Christmas, we also identified in open marketplaces 7% of fraud, analysed around 20,000 API calls on a daily basis and uncovered 123,000 transactions. In October last year, the GIA, the largest gemological institute of America that certifies 70% of the world's stones, was hacked, 2 people arrested, and 1,000 stones are unrecovered today. In November, HRD, one of the diamond certification houses, introduced a laser removal service. So now that they've taken the number plate off the diamond, it doesn't matter. We have the thumbprint of the diamond. So we know that we have something that is just the beginning. And beyond diamonds, we're moving into art, to luxury goods, and to where we know that combating counterfeit is a much larger problem than just 50 billion. It's 1.7 trillion. There you go.
Thank you, Leanne. And less than 7 minutes also. That leaves more time for our judges. I see a lot of hands there. So let's just start with the most eager one.
Bring on the questions.
It's a very obvious one. Why diamonds, by the way, and what's your background? You know, it's also related to the question.
Yeah, so let's start with my background. It's a little bit more, it's just as faceted as diamonds. So my background's 25 years in emerging technologies, and in the mid-90s I worked in RFID, and I've always played in the space of the emergence of something that has the allure of a greater promise and then the ultimate disappointment. So I understand... I understand how to traverse through the glacial melt of that promise, and so this is what we're seeing now. And I've had a number of startups, so I'm a serial entrepreneur, and I only learnt what that was. For me, it was translated into nobody would give me a real job. In 2010, I invested in a jewellery company, and that company supplied lost and stolen items to insurance companies in Australia. It dominates the space today. And that's where I started to learn and see the just unfolding proliferation of fraud, and most of it was around document tampering and super siloed systems. Why diamonds? Diamonds... You know, De Beers has been asking for permission and forgiveness since 1888, and it continues to do so. You know, the market itself is going through a number of shifts inside of industry. We started to see the surgence of synthetics that are coming onto the market in the 1950s. They were created with GE, but we were industrial grade diamonds. But now, of course, we've got them coming out at gem quality standards. So it's a really interesting industry because we have a pipeline and a supply chain. We have a consortium already in event with 80 countries on the Kimberley process, yet the devices that sit on the pipeline are not connected, they're black boxed. So as we start to see nanotech coming into play, we have ability to be able to use spectrography on smaller chips. We can IoT enable the diamond pipeline and provide transparency across an aggregated data set that will firstly address fraud, but more importantly, actually make them honest, give transparency into the opaqueness of the market. And we're about, the very core of our purpose is around ethical supply chain. Yeah. I mean, it's a long answer, right? But, yeah.
My assumption is, at least for the diamond value proposition that you have, that you're dealing with a very strong network effect. So if network effect, then power law, which means it's a winner takes all. So number one, is that a correct assumption? And number two, if that is, you know, how are you digesting and prosecuting that from your, you know, growth plans?
Somebody asked me the question the other day, who's my biggest competitor? And without thinking about the answer that I delivered, which was probably politically incorrect, as I just said, it's the cartels. But, you know, what's happening inside of the industry, you know, De Beers, no doubt, have had you wouldn't say a stranglehold, but have had a priority position in industry, and they still hold that position today. But because we have so many issues through that pipeline around integrity of supply chain, when you think about the size of the diamond market, it's 15 billion in rough. It runs through one iterative step. It goes from a rough cut diamond to polished. And by the time it hits the retail network, it's 80 billion. That's 500% value that's stacked across that pipeline. Now, if we have the onset of synthetics that are coming into the market, that are peppering the supply chain, that's causing concerns for banks in terms of financing, and consumers are not necessarily aware of the true confidence of the stones that they're purchasing, we think that the industry at large needs, and they've started to embrace it. In fact, one of our customers is in the room today from the diamond industry. There's a tectonic plate shift in transparency in this market. The bigger opportunity is the fact that diamonds is the one commodity that's yet to have true financial products wrapped around it. It doesn't have a futures market yet. It doesn't have ETFs yet. But the underlying principles and the pricing of diamonds is stronger than platinum and palladium and gold. Now, why is that? Because firstly, there's zero transparency. So transparency and liquidity. We know that the purpose of transparency is super important around blood diamonds and the pipeline. But as you start to bring transparency into this market, that underlying asset has the ability to become an investable vehicle. But unfortunately, it's also the largest carrier of anti-money laundering globally. So we know that we have interest from governments to ensure that we have transparency for reasons of counter-funded terrorist activities or AML, but we also know that there's a big value that can be unlocked. And yeah, we are dealing with the tough guys at the boardroom table.
Thanks for that. Quick question. You guys are working with multiple parties of the supply chain, so how are you specifically now in the diamond mine monetizing kind of your position within this business? Is it, on a per transaction basis, supply, licensing, just trying to get a sense of that?
So we've addressed open marketplace fraud, and that's moving itself quite quickly into a certification per transaction event. In terms of insurance, it's around detection of the underlying fraud-related issues. When you bring yourself back to the pipeline of mines, so from the point of rough cut that comes out of the ground to the point of certification, our work has been in underpinning the certification process with supply chain finance. IFC and the World Bank have been super helpful in this regard. Any industry that can show an ethical supply chain that provides continuous certification around transparency, not only related to the underlying goods, but also the workers' conditions, will invoke an IFC premium. So in Surat is really one of the major sort of centres in the diamond industry to do with cutting. Access to financial services in that market sits at rupee plus 16, yet the likes of the biggest companies of Rio and De Beers can access LIBOR plus 2. So we can unlock 200-300 basis points by taking the certification process and linking it into the already banks that are interested in supply chain finance. It's going to wash the shores, and we have the ability to plug the certification engine in underneath. So we see a part of that process for us on a $20 million throughput on an LOC, we take a portion of the savings on the interest. So it's probably a bigger monetisation path than our fraud element. Yeah. But the tech's not ready to do that correctly.
If you can make it short. Yes, just one quick question. How do you actually do this thousands of diamonds every day adding to the database? Is that outsourced to the producers, or how does it work?
Yeah, I mean, these aren't workers' hands. So we hard handshake into machinery. A part of the work that we've been doing in the market is around the emergence of high-definition photography and super small microscopic handheld devices, and those are plugged in at certain points of the pipeline. Inside of Antwerp is clearly the largest exchange, and then we have large certification points, so the GIA being one of the largest. We directly feed in from the GIA as a part of their process flows.
There's always a risk asking Leanne detailed question when you're on a schedule. She knows too much. Thank you, Leanne.
Okay, thanks.